All right, I'm going to go ahead and get started. Thanks everybody for being here today. My name is Geoff Bruskin. I'm the managing partner of White Tiger Connections. We are a consulting firm specializing in serving the public accounting profession. So we do three primary things. First is mergers and acquisitions for accounting firms. Second is recruiting for accounting firms. And third is partnership facilitation for accounting firms. And that third category looks like a lot of stuff between the wealth management world and the public accounting world. Topic of today's webinar is, so the title is White Label Solutions, White Label Accounting Solutions for RIAs. But the way I actually want to approach this today is a little bit more from a narrative perspective and talk about what I'm seeing in the RIA market in terms of just appetite by the RIA for business context, as well as appetite by the RIA's clients for public accounting services. So I'm going to do this kind of in three ways and talk about, well, actually there's four ways. So I'm going to talk about the four different options that RIAs and wealth management firms, could be broker-dealer as well, have in terms of leveraging the accounting profession to provide more value to their clients, and also in terms of ultimately making more money, both in terms of immediate cash flow and then total enterprise value to their business. So there's really four ways that the public accounting profession can benefit the RIA profession. The first and kind of the most basic, and the way that most wealth management firms historically have thought about accounting, is through partnerships. So let's say there is a $1 billion asset manager RIA, and let's say that there's a CPA firm, a tax firm that does $1 million in revenue, and they do tax advisory and tax compliance. A two-way partnership between this billion-dollar RIA and this $1 million accounting firm is a tremendous complementary, positive alliance, both from the RIA's perspective, and as long as the accountant has the peripheral vision and the entrepreneurialism and the industriousness to understand the value that is provided to them and their clients, to the accountant as well. The problem is a lot of times accountants are not entrepreneurial, they are not industrious, they are already overburdened with work. So it's a very kind of shiny object for RIAs to look at this partnership opportunity. Because of course, if you're an RIA, you're a wealth manager, and you're listening to this, the accounting firm is kind of the golden goose. They've got the captive pool of clients that are already in a financial conversation with those, with their accountant. And if you're an RIA and you can passively market to this captive client base that the accountant holds, all the better for you. So this is the kind of the easiest, the least intrusive, the most beneficial, and it benefits the client too, right? A lot of the RIAs that I talk to are like, why can't I generate more, alliances with accounting firms? And one reason is every RIA, every wealth management firm that I know of is thinking about the accounting profession as kind of the next frontier. The M&A market in wealth management is somewhat mature. It's not 100% mature, but it's pretty mature. There's only a slim pickings of firms, sell-side firms, books of business that are available in today's market. Anyway, thinking about how to grow and how to get more clients, well, we can't acquire more wealth management firms. We're doing all of the same marketing stuff that we've done, trying to get more assets under management, other financial services that go with the wealth management space. Where do we go next? How do we do it? Partner with accounting firms. So there's a lot of, everybody right now in the wealth management space is thinking about partnerships, and everybody is asking the same question, which is, why can't I generate more? And the reason is, so first of all, let's talk about the accounting profession for a minute and some of the endemic problems that underlie the entire profession. First of all, you have between 50 and 70% of leadership in the accounting profession is retiring in the next 3 to 5 years. Think about that. 50 to 70% of the leadership in the profession in the United States is retiring in the next 3 to 5 years. It is a mind-bending statistic. If 10% of the leadership in the profession was retiring, it would cause shockwaves. If 30% was retiring, it would be a massive, massive event for the history of the profession. We have 50 to 70% of the leadership in the profession retiring. Now, AI is this beautiful, shiny object. In no way can AI is multiple orders of magnitude away from being able to replace the leadership in the profession that is retiring. These are client advisors. These are the most technically competent accountants that exist in the profession. 50 to 70% are retiring. So that is the first incredible storm of, just at the time in their career that they're at, they're older accountants. One of the reasons why this partnership opportunity is between RIAs, or broker dealers, and accountants is so difficult is because so many accountants are on their way to retirement. So they are not thinking about growth. They are not thinking about adding more value to their clients. They're thinking about monetizing on the goodwill, succession planning, selling, whatever, however that comes about. So that's the first reason that partnerships are so difficult. We're going to talk about selling and some of the challenges with that in a minute. Another reason why the partnership between RIAs and accountants are so difficult is because of the tremendous talent crisis. So on the one hand, you have 50 to 70% of the profession that's retiring. And on the other hand, you have a net loss of new people entering into the profession right now. And we're just about to get to this massive retirement wave that's happening. It hasn't even really started yet. The AI CPA has done a terrible job for the last 25 years incentivizing young people to go into the profession, and it is getting worse. E&Y actually just invested $1 billion into their recruitment program, trying to get more people in high school to major into accounting and then be on a path to joining E&Y. It is so endemic. We have bad talent shortages in manufacturing and in other blue-collar professional services across the U.S. Accounting is worse. It is so bad out there. So you take leadership leaving, you take not enough people coming into the profession, you have an extremely pressurized situation that accounting firms have. In order to think about growth, you have to have stability under wraps. And these firms do not have stability under wraps. They are struggling to survive, working ridiculous hours, hardly able to keep up with client service, right? So those are the first two reasons. And those two alone, you would be in a near impossible environment in order to establish partnerships but if you're an RIA with accounting firms. But then you have a third thing, which is just the personality of the profession. And the accountants, if you know any, and not all are like this. There's a select group that are not, but there is a tremendous amount of ego, jadedness, and lack of peripheral vision and entrepreneurialness. And I'm not going to say much more about it than that. That's after 3,000 plus conversations with leaders in the profession in the last 5 years. I can say that quite confidently, unfortunately. So partnerships are hard. There are firms that do it very well. I know of an asset management firm, a wealth management firm. It's a broker dealer affiliate. They're about 11 billion in AUM. They add about 300 to 400 million a year in assets under management through about 120 partnerships with accounting firms across the country. And I'm not going to go into a tremendous amount of detail about how they do that today, because I would be violating my NDA with them to do that. But I just want to say it is possible to do. It's not that it's impossible to do these partnerships, but you better have a pretty sophisticated strategy, because it is not easy to do. Partnerships, that's the first of the 4 ways that RIAs or wealth managers can drive benefit and value, both financially and in terms of client service and client stickiness, from public accounting. Second way is M&A. So this is something that I've seen a lot of RIAs and wealth management firms move into, is wanting to buy accounting firms. And the first thing I want to say about this, and I mean no disrespect to any wealth manager who is on the call or listening to this recording, but it is, in my opinion, objectively harder to run an accounting firm than it is to run a wealth management firm. Some of those reasons why I've already alluded to. You've got a tremendous talent crisis. You've got a lot of jadedness and ego in the profession. The personalities that are drawn to the accounting profession typically are more back office and numbers oriented and less, the super people relationship advisor type people. Those are anomalous in the accounting profession. So that's and there are even other reasons, but it's hard. So there are a lot of RIAs that want to buy accounting firms. This can be done. I see it done all the time. It's done with success a lot of the time, but it's difficult. And I'm just going to talk about one key part of why it is difficult to right now. and that is that the talent crisis. So if you're an RIA, you don't have a corporate recruiting team that understands how to recruit, train, incentivize, grow talent at your firm. And talent is such a constricted commodity in the accounting world that unless you have a pretty clear recruiting strategy, you're going to have a hard time even getting to the finish line on a purchase with an accounting firm, because 95% of accounting firms that are selling because they lack internal succession. So someone is going to have to take over that accountant's client base. And the someone who takes over that accountant's client base is not going to be anybody in your RIA. You're looking at this practice with stars in your eyes because this is a captive pool of clients that you can market to, and your wealth management services are quite valuable, even if you only get a few clients, few high net worth clients in this accountant's book of business. That's very valuable to you. But someone has to serve those clients in an accounting capacity, or the seller, the accountant, is never going to become, they don't look at the shiny object that is what happens in the incentive of, they get bonuses and things like that when you upsell they want their core business protected. So how are you going to hire their successor, right? And so this is something that I see a lot of kind of head scratching about. We want to buy accounting firms, but how do we do it? Because we know we have to solve for succession, and succession is the beginning. It's not the end. You have all of the mid-level staff, the junior level staff, and anybody who is going to be succession minded, right? Somebody young who you're going to pull from another firm to then run this book of business that you've just bought. If you can convince the seller that you're going to be able to do that, now you have to incentivize that young person who's just come in to take over the book of business. He's going to want to, or she is going to want to grow that business. And then you've got a whole recruiting infrastructure that needs to be taken care of. And they're not going to come in to do recruiting. They're going to expect you, the owner, the financial backer, to do the recruiting. So talent, and all of the problems that exist with talent is it's a major barrier to M&A. Again, surmountable. I'm happy to do webinars and talk about that if it's interesting to the listeners, but very complicated. That's the second way. The third way that RIAs, wealth managers, can take advantage of accounting firms, both for their clients and for themselves, is simply hiring. Okay. And this is probably generally what I see the least attractive way to do this, because you're not getting the captive client base, right? This person you're hiring, who let's say is a tax manager or something like that, is not coming with business. So you're not adding to your core business model, your assets under management. But maybe they have the ability to mine your existing book for tax work. And there is value in that, but it's not the kind of exponential value that if you're wealth manager, broker dealer, RIA listening to this call, you're probably looking for more of that kind of explosive value that happens through a partnership, two-way referral source, very difficult to do, or M&A, two-way referral source, you take on the burden of getting the infrastructure. This is just like you're only going to get a single vertical of value, which is their marketing tax services now, or other public accounting services to your clients. You could just do the hiring. And I do see firms that do that, especially RIAs and wealth managers who are also thinking about M&A, start to develop a hiring vehicle inside of their company, because they understand maybe if they can hire a young 35-year-old CPA with a tax background who can start minding their business and maybe pay for themselves, when they find the firm to buy that lacks succession, that person is going to be able to be the successor, right? So it can be highly valuable and chronologically intelligent to start thinking about your hiring infrastructure on the way to doing M&A. And those two things really can be married together. And I think there's tremendous value in that. And that's probably a great webinar topic for me to do. But I mean, that takes significant investment, right? The amount of assets under management that you need to have in order to foot, $150,000 salary, which is what, it's going to cost to get somebody who's, first of all, they're very limited. There's not a lot of people that can do this, but they are out there, who's going to be a CPA, or even an EA, front office minded, advisory minded, have that technical backbone, be able to work with some of your higher net worth clients, because chances are if you have just a retail clientele as an RIA, this is going to be a harder leap for you to take. But if you certainly work with, business owners and higher net worth individuals, then, or ultra high net worth individuals, there's a lot of, you charge $15,000 for a tax return, right? I mean, more. You've seen much more than that. But anyway, so it takes a lot. You have to serious investment to do that. So way number one is partnership. Way number two is M&A. Way number three is hiring, and those 2 and 3 go together. Most of the topic of this webinar today, I want to talk about way number 4, which I don't think really exists today, and that we're bringing it to market, myself and my network, and we're calling this a white label CPA solution. We want to build CPA firms inside of RIAs. And the way that looks is I've interviewed, as I said, or spoken to over 3,000 accounting firms in the last 5 years, or rather 3,000. David, your timing is so perfect. I was just saying, David, your timing is so perfect. It literally could not be better. I've interviewed over 3,000 accounting firm leaders in the last 5 years of running my business. And this gentleman who's just joined us on the call today, David Auer, is head and shoulders above the rest. He is the number one guy that I have ever met. David is by way of introduction, and then I'll maybe turn it over to you to talk a little bit about your practice, David. Welcome. David is a tax accountant, very well credentialed CPA and JD LLM in tax, who has built an accounting firm that is just so tremendously head and shoulders above others that I have seen. The vehicles that David uses, the tax savings methods that he uses are more sophisticated than any other accountant I have ever seen. The structure of his firm is better, more sophisticated, more value additive than anything I've ever seen. And so David and I are partnering to bring essentially his accounting firm into RIAs and wealth management firms that want to partner with us. And whether we do that through a brand, which is David's brand, which is Provident CPA is the name of his firm, or we're exploring ways that we can do that through white labeling, so that in your go-to market activities, you can say that you now offer more than just traditional financial services, wealth management, asset management, but also tax, accounting, trust and estate and asset protection, and financial coaching, these kind of core public accounting services, which are so valuable. So David, would you like to maybe talk a little bit about yourself and your practice for our listeners?
Well, thanks, Geoff, for the introduction and the kind words. I don't know if I can live up to all of those comments, but I'll do my best. So we have a somewhat of a unique CPA firm practice. Our clients are all over the United States. And so is most of my team, as well as throughout the other places in the world. But our main unique propositions we start every new client relationship with a tax planning engagement. So generally, we'd like to identify what are the immediate options are available to a new client that perhaps they had not discovered or knew about coming into the relationship. And so our focus over the last several years has been on high income professionals and business owners, generally because they're the ones that are they have the highest return on investment possibilities. But also tax planning also applies to everyone, especially if you have the right circumstances. So anyway, we start with what we call a strategic tax blueprint. We do charge a fee for that. It depends on the level of income, but it does come with a 10 times guarantee that if we can't save at least 10 times that amount of that fee in the first year in tax savings, most of the tax planning we do is a multi-year over year savings. So, but we do measure that guarantee in the first year. If we can't come up with 10 times the tax savings in the first year, then we'll refund the fee. Good news is in the last 6 years, we have not ever had to refund someone's fee, because we're pretty good about making sure that we create that amount of value. When we go through the blueprint, we identify all of the we forecast out what the taxes could be over the next 3 to 5 years, depending on the client providing that information. And then we'll come up with any number of recommendations. Usually it's at least half a dozen to possibly several dozen recommendations, and then present those to the client, both before and after, showing what the tax savings could be. On average, our clients generally realize about a 55% reduction in their tax liability. So again, fairly substantial savings that are out that we are able to identify. Obviously, that comes with usually the question of what are the risks if I get audited, we include that in our representation. So we handle it, if in the 1 out of 100 chances someone gets audited, we represent them in that audit. We've never had a negative result in an audit, although they haven't happened very often. But if they did, that's another part of how we support the recommendations that we provide. But anyway, the bottom line is, a 55% average reduction in taxes usually results in that amount of additional net worth that's going to go, drop to the client's bottom line. That obviously is, if they don't choose to use that tax savings to increase their lifestyle, that money just allows them to accumulate and reach their financial goals all the sooner. And the benefit is, from your standpoint or the advisor standpoint, is there's more money to manage and to also be able to help that client along that journey of financial independence. So anyway, that's how we work. Everything we do is scoped out on a year-over-year basis. We build in all the necessary meetings and communications that need to happen. We have a financial strategy session every year with all of the client's advisors on the same call, just to make sure that whatever we're doing, everyone else knows about, and we're coordinating all of our efforts and in collaboration. But anyway, we scope everything out over the next year. We reduce that into a fixed monthly amount, depending on what the client has told us that they want to implement. And then we move forward. We spend the first half of the year usually in the compliance mode of like most CPA firms, getting the financial statements and the tax returns completed on time. But we pivot around this time of the year and move almost full time into tax planning. So our clients every year are getting an updated tax projection, coming up with a list of whatever new strategies or old ones that we want to reconsider or consider again for the current year. So anyway, it's a fairly high touch, very proactive tax planning oriented practice model, and usually mirrors what a typical wealth management firm has in terms of how they work with their clients. So it creates a lot of parallels in having a similar model.
Tremendous. Thank you so much. I was muted. Yeah, I realized it. Thank you for the overview, David. I think so a couple of kind of key points. So one of them is most CPA firms are very time-based in terms of the value that they provide to their clients. David's firm is a value-based model. So this is something that's not totally anomalous to the accounting profession. I'd say maybe 15% of accounting firms have adopted a value-based subscription-oriented model. The model that David has created is actually far more sophisticated than just being subscription oriented. And we don't have time on this call today to go into all of the depth about that. But David, maybe do you want to talk just a little bit about kind of the advanced value-based model that you offer to the high income professionals you work with?
So yes, so because we're generally dealing with clients at a higher tax bracket, the tax savings usually is anywhere from a 15 to a 25 times multiple. We don't charge based on the tax savings. But because we do this full time, we are able to fairly accurately identify how much time each strategy is going to take to manage. And the importance is on managing that strategy, because there almost with every tax strategy there is a level of documentation or maintaining the right type of structure. So anyway, we know what that time and effort is and what skill sets are necessary. So we build that in. It is a value-based service because it is a fixed amount, but it also comes with what becomes a very predictable and fixed amount of tax savings as well. So the value proposition really is, bottom line is, what's the ROI? And we show that in the blueprint on the front end. So before the client ever commits, they'll see, hey, this is going to allow me to keep, 15 times whatever I'm paying this firm for the tax planning services in that example of a 15 times ROI. But anyway, it's very quantifiable, and we have a month-to-month relationship with our clients, so we don't have long-term agreements or contracts. If we don't reach the results, the client can move on, or if they don't like somebody on my team, which I hopefully doesn't happen, they can. So it's a very it's a very easy, flexible relationship. On the other hand, because we generally have a lot of clients that are in industries like medicine and other industries that are under a lot of pressure, we do come across some clients that are somewhat difficult to deal with from time to time, and so it just may be more mutually beneficial for us to create the strategies, get everything started, and then they move on to somebody else that they might be a better fit with. That rarely happens, but we do try to make sure we work with people that we can consider friends, just because that usually results in a much better relationship long term.
Totally agree with that. That's great. Most accounting firms, David, have no capacity whatsoever or very, very limited capacity. Could you maybe talk a little bit about how you've been able to create so much capacity to continue taking on new clients?
Well, because we have a history of relatively rapid growth, so far in the last 6 years, we've averaged somewhere between 40 and 45% top line growth. What that has, and because it's a monthly predictable amount that our business generates, we can make longer term decisions in terms of staffing versus most accounting firms. Do all the work, they bill for it when the project is completed, and then they might see you get paid 90 to 120 days out, which is a very poor way to run a business. But that's how most of the accounting practices that I'm aware of are still operate. So as a result of having very high predictability in revenues, it allows us to be able to bring team members in before we actually need them. And in our practice, it's also important that they go through all of the training that they need to know. And for the most part, most of the CPAs we hire have never been in an environment involving the level of tax planning that we do. So there's a new level of training that everyone that joins the team generally needs to go through. So I usually anticipate what the need's going to be about 6 to 9 months in advance. So we have plenty of capacity when and if we grow to that level.
Angie on your team, her function is extremely unique. Can you talk a little bit? And I promise to our listeners that I'm really going somewhere with all this information, and I'm going to bring it all home probably right after David, you answer this question. Angie is super unique on your team. Can you talk a little bit about what she does?
Well, she's generally the gatekeeper with a brand new prospective client that calls it from any number of different places, whether it's an internal or a client that's referring us, referring them to the firm, or someone who comes across our website or may have read one of my books. But anyway, Angie usually has an introductory call with the client, explaining our process and the steps that we take our clients through. If the client generally sees value in what we can do, then they'll usually purchase the strategic tax blueprint. So Angie is our new client success manager. So she basically quarterbacks the client relationship all the way through the blueprint presentation, which is where I'm presenting the recommendations. And then generally, if the client moves forward, she's involved in the onboarding of that client as well, just because there's usually all the strategies that we recommended that the client needs to have set up and then started, and then oversees the introduction of the various team members that are going to be working with that client. One of the other unique things about our practice is she'll hand off that relationship during that onboarding process to a designated client service manager. So this is not familiar with most accounting firms, but we believe that in the level of service that we provide, it deserves to have somewhat of a concierge, individual that can serve the client and just make sure that everything that we're working on with the client, that they're in the loop, and then vice versa. If they have any questions, they can filter them to anybody on the team that's working with them, but also know that this client service manager is also their point person. So it's a little bit different. Quite frankly, it's more similar to how a lot of wealth management firms are set up. We just feel like that's because of all the balls that are juggled usually when we're doing advanced tax planning. It's very important for the client to have a point person that they can communicate with throughout that relationship.
Thank you so much. Just taking a step back for a second, in my experience, and so now we've, talking about this fourth way that RIAs and wealth managers can take advantage of the public accounting world for themselves and for their clients. Those are two very important things, right? For themselves and for their clients. In my experience, there are two things that wealth management firms look for today. It's kind of the two principal things. And again, I'm biased because I come from the accounting world. But the first thing is you want to add more business to your assets under management. And the second thing is you want kind of a platform level service that you can provide to your clients. And that could be through a partner accounting firm, model one. It could be through an accounting firm that you own. That can be model number two. It could be through internal accounting staff that's on your team. That's model number three. And this model number four, which is kind of a specialized and curated partnership or a white label partnership, is the fourth model. The reason why this fourth model obviously provides that second benefit to RIAs, which is the platform level service to their clients. So clients are stickier. They get more service. And frankly, I would argue, and this is the kind of the main reason. So you're probably scratching your head and saying to yourself, well, how is it possible that this could also grow my book of assets under management? Simply doing this kind of model, because David would likely not be bringing David and Geoff, right? At least under the model as it currently exists, and we're currently conceptualizing it. We're not bringing more assets under management to your door through the services which we can provide. Well, the reason for that is that having this model in place actually, first of all, makes your clients stickier. So it's that platform opportunity. And as their friends, their family, their contacts need, possibly not, financial services, wealth management services, but they need CPA services and things like that. You have clients walking through your door because they are in need of the services that our nuclear entity kind of being cultivated inside of your firm can provide. So there's that element of stickiness. The other thing is about the marketing that you can do. So the goal here that we have is that you can market yourself as the next generation CPA firm, as the platform financial services firm that has these capability sets within your stack that you can offer. And Angie, or if you're watching this recording a year from now, because while David and Angie have ample capacity, right, David, to take on new clients today, thanks to their very sophisticated business model, at some point we'll need more Angies, and we have the ability to go out and get them and train them so they can do this. Angie will work in parallel closely with you, the financial advisor. So in the cases where your client kind of needs one of the services, or an introduction to the services in depth, certainly our goal is to evangelize you with more information so that you can talk about the very tremendous value adds that can be provided. And you can also do so in networking events and in your newsletters and as you're out in the marketplace. But also so that you and Angie are really in lockstep with one another about what is going to be most value additive to the client, and shepherding them through a process. And through that, it's both to your active community and their networks that are going to be funneled into your company. And over time, there's more wealth management, and your core business is going to grow. And in your marketing material, that's the other material point, because a lot of these CPA firms are, in my experience, they're shutting off the lights, they're selling, and there is a ton of frothiness based on all of the mismanagement and how rare David's firm and his business model are. Most accounting firms, as we talked about, do not run themselves effectively. So we want to create this mechanism where you don't need to worry about staffing. You don't need to worry about quality assurance. You don't need to worry about running an accounting firm. You don't need to worry about having one exclusive partnership with a CPA firm, but this becomes a nuclear capability that's essentially a managed service that we're providing for you. And the growth prospects of it are unlimited, because you now get to go to market and present yourself in this kind of a way. So organically, over time, you're going to develop much more business through this accounting opportunity than it would be just singularly getting into a partnership with an accounting firm. Now, the price of this, as we're saying right now, is zero. So there's no setup fee, there's no price in order to be in an engagement with us, versus obviously acquiring firms, hiring, Those two models are going to be, very cost intensive. So there's no setup cost. You have zero out of pocket whatsoever. David, do you maybe want to talk a little bit about how we are conceptualizing revenue share and sharing an enterprise value and the financial benefit to RIAs?
Well, it can actually be a couple of different ways. Obviously, our services have the ability to build in a recurring revenue share over time. And then we also have several tax strategies that are one-time only types of strategies, some of which we have an ongoing maintenance piece. And so above and beyond our normal services, we might have unique, specialized tax services, i.e. eliminating the capital gain on the sale of a business or an appreciated asset that otherwise, wouldn't be reinvested in maybe in a 1031 exchange. Or we have, other strategies such as we have a new self-insurance company concept that's owned by self-directed Roth 401ks or IRAs. So those are strategies that most of our high-end business owner clients are very interested in, just because it's an alternative to the traditional retirement plan, but it's what I call a tax unicorn, meaning that you get a deduction for something going in, and when the money comes out ultimately down the road, it comes out completely tax-free. So there aren't very many of those type of strategies out there. So that's one in particular that is an additional value add service that we also have a revenue sharing model, and to the extent that those go on in perpetuity, generate not only a recurring revenue sharing in perpetuity, but also more assets under management, because now because they didn't have to pay, the client didn't have to pay as much tax. There's just now more money on the table to be able to manage.
Great. And how about maybe some of the sharing and enterprise value? Is that a good place to go next?
So the enterprise value is a new concept that we're fleshing out right now. But basically, as the value of the CPA firm goes up and that value increase is attributed to the referral relationships that a wealth management firm brings to the table, we will share that increase in the enterprise value. So it's basically the same as if you owned a small CPA firm within a larger CPA firm. As far as how that would be valued on the back end.
Tremendous. So we have about 15 minutes here. If anybody on the call wants to ask questions, please feel free to drop them in the chat. David, any other commentary that you'd like to make about the program holistically?
Well, this is kind of an exciting time for us. Anytime there's an election year, we seem to have a lot of increased awareness and interest in tax planning, proactive tax planning. I think we live in some very interesting times in that, depending on who gets elected, both in the House and the Senate and the president, what we experience from an income tax standpoint, is right now somewhat uncertain. So there's a lot of increased appreciation and need to want to take advantage of tax planning opportunities that may not be around, after this election's over. So anyway, that to me is an ideal opportunity for a wealth advisor to get in front of their clients proactively to see if there are any of those opportunities that need to be put in place before we lose them, and it can happen as early as next year.
Tremendous. And just while waiting for any questions to come into the chat, a little bit more commentary. I spoke to a $7 billion asset manager yesterday. They have both an RIA and a broker-dealer vehicle, and they've acquired a few accounting firms, or looking to acquire more. We talked a lot about the talent crisis in the accounting profession, and I shared this business model, this option 4, with them. One of the points that came up is this is not, it doesn't have to be a replacement for your M&A strategy at all. This can simply augment it if M&A is something that you have really the ambition to do, or you're already involved with. The unfortunate truth is that accounting firms, as we've discussed, they're very, very hard to run. They're even harder to turn a profit off of. And I would say as many as 85, 90% of accounting firms, even the ones that say they do tax planning, do not do tax planning anywhere near the level of sophistication that David and his team do it. It is truly orders of magnitude different. The savings that he can provide, the subscription and value-based model that he can provide, if you're acquiring accounting firms, or even partnering with accounting firms for that matter, what you're going to bump up into as you grow, and this is really a model, especially for advisors and firms that are interested in order of magnitude scale of the assets that they have under management. You're going to bump up into accounting firms that run out of capacity and that run out of the ability to deliver white glove service as an extension of you to your clients. It doesn't have to be that this is an instead of solution to that really shiny object. That is, how do we find a way to market to the captive accountant's client base? That's great. And to the extent that you can make it happen, and maybe White Tiger, my firm, can even help you with that on the M&A or the recruiting or the partnership generation side of the house. But this vehicle really is about dimensionalizing your practice as it exists today and the trajectory of your practice going into the future so that you can capitalize on more clients, and really so that you can provide your clients with better and more holistic service inside of your firm environment. And that's something that on an external basis, again, before meeting with David, after 3,000 conversations, I had not found another accountant and who had, kind of the technical competency, the degree of that which is required, the human and the interrelational ability to drive it and to make it happen, and then the firm structure and staffing strategy to handle the capacity and serve the client with such a sophisticated mechanism. So really, this is we think we're onto something really special here, and would love to have one-on-one conversations with anyone listening to this if this is something you'd like to learn more about. Well, we have had no questions come in, so I'm picturing all of you watching this with your hair blown back. Hopefully this has been valuable to you. And David, any kind of final thoughts before we close here?
No, hopefully people will reach out and want to have a conversation. But I appreciate the opportunity to be on the call today and look forward to talking to anyone interested.
All right. Thanks for your time, everybody. Have a great weekend.